Everyone knows NVIDIA has been the heartbeat of the AI revolution, the stock that turned a $10,000 investment into over $1 million in just a few years. But right now, something interesting is happening. The hype is fading, the stock's correcting. And if you look closer, we might be entering the final stage of that pullback before the next major bull run. So today, I'm breaking down exactly where I think NVIDIA is headed next, based on both fundamentals and technicals. We'll talk about how the company's numbers are evolving, what the charts are signaling, and why I believe we could soon see one last drop before a long-term trend reversal. Stick around to the end. I'll also share my personal price targets for both the short-term correction and the long-term move through 2027. Before we get into the charts, let's look at the bigger picture, because NVIDIA is still moving full speed ahead behind the scenes. Recently, NVIDIA and OpenAI announced a strategic partnership worth up to $100 billion, aiming to deploy 10 gigawatts of NVIDIA-powered compute infrastructure. This isn't just talk, it's a formal letter of intent to build massive new AI data centers powered by NVIDIA's Blackwell architecture, which is already shipping to major clients like Microsoft, Google, and OpenAI. The goal is to scale AI infrastructure to a level the world has never seen, essentially building the backbone of next-generation intelligence systems. And that's the interesting part. While short-term traders see a downtrend, the company itself is quietly locking in multi-year demand. Now, fundamentally, NVIDIA is still a monster. In 2020, the company generated just over $11 billion in revenue. By 2025, that number jumped to about $130 billion, and projections for 2026 are around $206 billion. That's nearly 20 times growth in 6 years, unheard of for a company of this size. Operating profit tells the same story, from $4 billion in 2023 to an estimated $128 billion by 2026. These margins are more like a software company than a chip maker, showing NVIDIA's dominance and pricing power. Free cash flow is expected to approach $100 billion by 2026, giving NVIDIA incredible flexibility for research, buybacks, and acquisitions. And here's the crazy part. After all that growth, the stock's forward PE is around 26. That's not cheap, but it's not outrageous either, especially when earnings are growing faster than revenue. So, on paper, NVIDIA looks expensive, but it's earning that valuation. Now, let's talk price action. Since August, NVIDIA has been in a steady downtrend. I expected this correction, and so far, it's playing out almost perfectly. We hit my short-term resistance zone between $189 and $192, which capped the bounce. Now we're in the final stage of this pullback. My next target zone is between $147 and $162. That's where I see strong technical support and the potential for a reversal. Could it dip lower? Sure. There's a small probability of testing around 136, but that would likely be a panic flush before a rebound. Once the stock stabilizes in that 150 area and volume returns, I expect the trend to shift back bullish, possibly leading to the next major move up. Looking ahead, I remain long-term bullish. If NVIDIA continues executing at this pace and AI infrastructure spending keeps expanding, I project a 2027 price range between $276 and $335. That's based on earnings growth, not speculation. In other words, yes, we might be in a correction now, but this story is far from over. So here's the takeaway. NVIDIA's fundamentals are still world-class. Technically, we're likely in the last phase of a healthy correction. And long-term, I'm still bullish, with a realistic target around $300 by 2027. Short-term pain, long-term opportunity. That's how I see it. What about you? Do you think NVIDIA has bottomed yet, or are we heading lower before the next rally? Drop your thoughts in the comments. Thanks for watching, and if you found this breakdown useful, hit that like button, subscribe, and I'll see you in the next one.